Off to a tense start to the second quarter of 2025, to put it mildly. Let's get some new insight into how markets and the economy are holding up amid all of the tariff tantrums. Thomas Hayes joins us for that. He is the founder, chairman, and managing member of Great Hill Capital. Thomas, thanks for coming on.
Thanks for having me, Karina.
So Thomas, tell me, first of all, what do you make of market reaction today ahead of these tariffs? What's it signaling to you about just how much investors actually believe Trump follows through on all of these grandiose tariff pledges? Reports are 20% on a broad range of imports, but nothing's firm yet.
Well, this might be the most telegraphed, quote unquote, surprise in the history of stock markets. I think a lot of the bad news is already priced in. And as Warren Buffett says, be greedy when others are fearful and fearful when others are greedy. And right now, people are super fearful. As a matter of fact, if you look at the AAII bearish sentiment indicator of retail investors, it's the most pessimistic since the tech wreck in 2022 and more pessimistic than the lows of COVID and the lows of the great financial crisis. So if you're not looking for opportunities in times like these with high quality businesses when they're marked down, when are you going to look for them? You know, we say on Wall Street, it's the only market you can go when they hold a clearance sale, no one shows up to buy.
Yeah. So you say, buy the dip, look for the bargains now, stay ahead of the curve. If he actually does follow through, could you tell me, if so, if these tariffs stick for any period of time, what does that do to stocks and to the economy?
Well, look, it's a one-time level up, okay? And right now, based on how the market performed in the first quarter, with the U.S. underperforming international stocks by the widest margin in over 2 decades, S&P down about 5%, international up about 8%. A lot of the worst case is priced in. So you have a level up in prices. But at the end of the day, how many of these businesses are going to stand up factories in the U.S. for 3.5 years and spend tens of billions of dollars to do so? The products that they provide will still be in demand. They'll have to get it. They'll have, some will get passed through to the consumer. Some will be shared by the manufacturers and the suppliers. But at the end of the day, it's a one-time. It's not 20% compounded at 10% per year. It's 20% one time, and the market will digest it in a matter of weeks. And you can use that opportunity and that volatility to buy high quality companies for the long term. It's not the case that tariffs come in and every business goes out of business because someone new starts up in the United States. That's not what's going to happen. What's going to happen is there'll be some short-term friction and long-term reward. Welcome to Trump 2.0, same as Trump 1.0. New day, new headline, new volatility, resolves higher over time.
So you're saying everybody should just take a breath, but GDP for the first quarter is not going to come in anywhere near the 2.4% we saw in Q4. Some say we can actually see a contraction because of all of this tariff volatility. Do you think we need to worry about a recession?
No, I don't think we do need to worry about a recession at this point. The numbers that you're seeing as far as Atlanta GDP now are noisy because of inventories and some pull forwards and related to the uncertainty of policy. But this happens every 4 years. You have uncertainty in the first quarter with a new administration. It doesn't have to be good policy. It has to be known policy. And what the market grappled with in the first quarter was unknown policy, and we're going to get greater resolution. And you could find in the next few days or the next couple of weeks, this is a clearing event. Whether it turns out positive or negative, at least we'll know what the rules of the game are, and we can adjust accordingly. And that's what Wall Street wants to see.
So you're saying, it's been a miserable first quarter by all accounts, all the major averages lower, flirting or in correction, inflation creeping higher. So what do you actually anticipate seeing with stocks near term and then midterm as well?
Well, look, I think the theme that we came into the year with is going to continue. And the theme that we came in was you want to be buying international stocks, particularly China tech. Our largest position that we built up over the last 1.5 years has been Alibaba. We think that's going to continue to outperform. We think international stocks are going to continue to outperform as the dollar weakens. Mag 7 would underperform due to increased capex and lower earnings power, decelerating earnings. I think we're at the point now where enough of those stocks are oversold that you could see a bounce in Mag 7 in the coming quarter. But I do think it's going to stay in that range, even if it trades back up to the top of the range. I do think Mag 7 will underperform. I do think international stocks will outperform domestic stocks this year, and that's where your opportunity is going to be. So if you're a trader, maybe take a punt on some of these tech stocks. If you're an investor, start buying industrials, everything that's perceived to be affected by tariffs that has been marked down. This is a perfect example, Karina. Instead of buy the rumor, sell the news, this is a sell the rumor, buy the news. Sell the rumor of tariffs, buy it when it's actually announced. And I think we're going to have opportunities here into Q2 and beyond. Guidance has been taken down materially in Q1. That's the normal game every year. First quarter, CEOs give conservative guidance so they can beat in the subsequent 3 quarters, get their bonuses, get their options. Shareholders are happy, and this year will be no different.
I love that you're talking about international stocks there as well, because NVIDIA down 21% year to date, Tesla down 28% year to date. Tell me quickly, where do you stand on gold? Where do you see that going?
I have no view on gold as it yields no cash. I like businesses that generate free cash flow that I can measure, that are growing, that are high quality, durable businesses. Gold is just a bet on who's going to come in and, after you and buy it at a higher price. And that I'll leave that game for other people.
Okay, we'll see how it all shakes out on Liberation Day. Thomas Hayes, thanks so much for coming on.
Thank you, Karina.
And still